A new report from Realtor.com shows it's more affordable to rent a home than buy one in all 50 of the top U.S. metros. This has grown from last year, where 47 metros were cheaper to rent than buy. Here with more insights, we've got Ralph McLaughlin, who is the senior economist at Realtor.com. Ralph, great to have you on here with us. First and foremost, I mean, these were some pretty interesting results that you saw come across. And look, I've lived in many of these cities, a few of them at least, over my rental past and history, where I knew I couldn't be able to buy a home. But take us into some of the biggest surprises from your findings for you.
Yeah, I mean, I think some of the biggest findings from this report is that this is now the 12th month that we've seen rents actually decrease on a year-over-year basis. So that's certainly contributing to the fact that it is cheaper to rent than buy in the 50 markets that we track. Some other interesting findings that we've seen are that the gap is biggest in very expensive places on the West Coast and in Texas. So Austin, Seattle and Los Angeles have the biggest gap. In those places, it's basically a no-brainer whether or not you should rent or buy, at least from a cash flow perspective. Those places, it is much cheaper to rent than to buy. We have also seen rents start to come down on a year-over-year basis. Again, 12 months, they're down by not just 1% overall, but we're seeing rents of one-bedroom units come down by almost 1.5%. Now, we are starting to see some markets shift towards buying. They're still cheaper to rent than to buy, but markets like Birmingham and New York have seen listing prices actually rise on a year-over-year basis. And so while it's still cheaper to rent and buy in those markets, that gap is also narrowing somewhat.
Okay, and so, I mean, is this net positive or net negative? I mean, we're talking about rental prices coming down, which is good, but we also want to see home prices come down too, so that it's more affordable for people who are currently renting to make the transition and do so seamlessly at some juncture.
Well, for renters who want to buy eventually, there are starting to be positive or net positive signs here that maybe in the next 6 to 12 months, the market will be much friendlier to do so. So like I mentioned, we've seen prices start to come down a little bit. We've seen rents come down, so that's favorable. And the big kicker over the next 6 to 12 months is how much mortgage rates are going to come back down. Mortgage rates just a few months ago were over 7%. They're now down to around 6.4, 6.5%. And if the trajectory is as forecasted, we could see rates as low as 6%. And certainly that is likely to kick some markets back into the better to buy than to rent range. Although what happens with prices and rents in the interim over that period really are going to help dictate how things play out.
You know, I guess as you overlay additional data about where homes are being built, is there any kind of sense that you get around where more capacity is coming online in new home construction that's taking place, and looking across these markets and trying to figure out where we can anticipate even more movement, even more of a delta, whether that be a tightening of the rental rate and what people are paying on the mortgage front, or even a widening of the gap?
Yeah, so I think we'll see tightening of the gap in places like the South that builds a lot of homes. So places like Texas and Florida, where they do build a lot of homes, we've seen more inventory come onto the market, which has led to homes, leaving the market slower. And in addition, in those places, we've also seen a rise in more affordable inventory on the buy side, below $350,000. So in those markets where rents have not grown a lot, we are starting to see prices or signs that prices might come down even more than they already have. And that would actually help narrow that gap, which means that if mortgage rates fall by another 50 to 100 basis points over the next 6 to 12 months, it almost certainly will make buying a little bit better of a deal than renting. Despite the fact that now all 50 markets are in favor of renting, we could see that shift really start to play out here in the South over the next 6 to 12 months.
Ralph, also just lastly, while we have you here, I want to get your reaction to what we're seeing right now playing in the political landscape, and specifically as both campaigns are going to try and figure out how they can incentivize, or at least how they can get their message to first-time and new home buyers out there. I mean, one of the most recent moves coming from Vice President Harris's camp, the Democratic nominee, for thousands of dollars that could potentially be used for first-time home buyers to put towards that home as well. I wonder just what you're making of these moves.
Sure. I mean, one of my favorite topics, at least now, to talk about. So, yeah, let's dive into it. The Harris administration has announced that certain home buyers, first-time home buyers, would be eligible for up to $25,000 towards a down payment. And that's a non-trivial amount towards a down payment. If you look at the median price home in the U.S., that would account for 5% of the down payment needed on the median priced home. Some households, if their income is high enough, that would pay for their entire down payment. They could put 5% down, use that $25,000 for that 5%, and not have to come up with any of their own money to put in. But I think more exciting than that, I mean, who's going to say no to free money towards a home? As an economist, I'm more excited about policies actually on both sides of the political aisle, and that is policies focused on supply. Both the Harris administration and the Trump campaign have announced policies targeted towards building more housing. And that is one of the real problems we've had in the housing market, not just over the last 5 years, but over the last 2 to 3 decades, which is we've been underbuilding compared to how much we've built, in the 60s, 70s, and 80s. On the Harris side, they have focused primarily on removing barriers to construction and also encouraging policies that help speed up construction so that supply response will be there as demand rises. And then on the other side of the aisle, the Trump campaign has said they want to double down on the American dream and encourage growth in the suburbs. So even though there are two slightly different flavors on a bigger theme, which is new supply, it is very, very comforting, welcoming news for an economist like myself who's been studying housing for a couple decades and has seen that, the real issue has been on the supply side. So at least, as a housing economist, this has been, one of my favorite, election years because that focus has been on supply and not as much on demand.
Ralph, while you've got that economist hat on, just lastly here, as you're thinking about the Fed and their policy pathway to cut rates here, what is your greatest anticipation for how that's going to impact the housing market?
Yeah, so we're going to expect a 25 basis point cut in September, and then 25 to 50 basis points by the end of the year. Certainly, some of that expectations have been priced in to mortgage rates already. We see mortgage rates come down quite a bit over the last month. We do anticipate as we get better readings on inflation and perhaps better readings on the job market and unemployment, that we will see those start to come down in a very steady pace. So we're forecasting mortgage rates at the end of the year to be down around 6.3%, maybe slightly lower. And that's certainly going to help buyers as mortgage rates come down. But we've seen inventory rise as well. And rising inventory not only gives house hunters more choice that they haven't had, but the lower mortgage rates is going to make it slightly more affordable to buy that house.